So what is the deal with the outrageous clickbait on the car market these days? This is not the video I planned for this week, but once I started to read the 2023 data, I just want to completely debunk all these doomsday YouTubers that I've been seeing all over my YouTube feed. So let me give it to you up front. The data these reporters are using, does not support a car market crash ever freaking happening. In fact, the data originator, which is Cox Automotive, even they conclude in their report that a car market crash is not happening. In my opinion, these YouTube reporters are fully embracing a modern form of yellow journalism that used to be exclusive to the financial YouTube content field, but now it's somehow made its way into the automotive section. And here's the worst part: even if you fall for the clickbait, you click on their video, they don't correct themselves in their own video, they just double down on the fear. And then after telling you that the car market is going to crash, they'll remind you after. Here, this gets me. This gets me a little bit. After they tell you the car market is going to crash, they're going to remind you at the end of the video to subscribe and use their website the next time you purchase your next car. Kind of ridiculous. So this data that I said, where is it coming from? Many of these reporters have been citing the Manheim, I think is how you pronounce it, Manheim Used Vehicle Value Index to support all their FUD. Not just YouTube, but also Yahoo and Daily Mail I've seen use clickbait to get people to click on their articles, and they've been doing the exact same thing. But has anyone actually read the reports or looked at the data? I did, so let's go ahead and review it together. Here is the Manheim report for 2023. It even tells you it's a short 7-minute read. And yet that seems to be too long for people to spend the 7 minutes to actually read this thing. Not just that, they also give you article highlights. If you're too lazy to read the 7 minutes, they give you a TLDR right here for you. So let's read the first highlight. Wholesale used vehicle values end 2023 down 7% year over year. Retail used vehicle listings prices are down approximately 4.3% year over year. So everyone that's been using that 7% figure to justify a market crash, this is where they're getting it from. But here's the problem with that. What does wholesale mean? Exactly? There's two figures here. Which one matters to you? Well, wholesale is what the dealers are paying either to manufacturers or what they're paying to the used car auctions, which means it has some impact on car sales, but it doesn't matter to you because ultimately the only figure that matters is the retail value. The retail value is what us consumers are paying to the dealerships, and that's only down by 4.3% for the entire year of 2023. And here's the thing, that's just from this one index. If you look at CarGurus for their index, they are reporting a year over year of 3.44%. So let's just meet in the middle and say that the car market for us retail consumers is down 4% in 2023. So 4%, what exactly does that look like? It means a used Honda Civic selling for $30,000 last year is now selling for $28,800 if you take away 4%, because 4% of 30,000 is $1,200. That's it. That is all we're talking about, just $1,200. Another way to measure that to make it a little bit more tangible is if you finance $30,000 at 6% for 5 years, or you finance it at with that savings of $28,800, you are looking at a monthly savings of $20 a month. So this market crash everyone is talking about is over $20 a month in payments. Now, if we go back to the report and look at highlight number 2, after historic price increases in 2021, wholesale used vehicle values have trended downward for 2 years. Makes sense. We know that's happening. Still, the index in December was higher by nearly 33% compared to December 2019. What does that mean? It means that based off of this index, we are still technically closer to the pandemic highs in 2021 than we are to the pre-pandemic level of 2019. It means we are still way more expensive than what we were in 2019. Next is highlight number 3. 2024 expectations for the wholesale used vehicle market include slightly increasing supply, decreasing prices, and further EV growth. Now here's the thing, they're specifically talking about wholesale used vehicle market. So let's actually read the article, dig a little deeper into highlight number 3. What are they actually saying? Shocker, right? I'm actually going to read this research. Do reporters even do that anymore? Probably not. Okay, so in the article, used in wholesale vehicle market forecast and outlook for 2024, they give us their outlook. We don't need to make a prediction. They're doing it for us. So let's read it. Right here, it says the vehicle index is forecasted to be up 0.5% year over year by December of 2024, which would be roughly 2 points lower than a normal year. So what this is saying is that they expect used car prices to actually go up year over year. However, it's going to go up slower than the average year. It's only going to go up 0.5% when it normally goes up around 2.5% per year. They're saying prices are basically going to stay the same. And now we also have Jeremy Robb, the Senior Director of Economic and Industry Insights at Cox Automotive. He gives his opinion, and in his opinion, it concludes, but the average value of a wholesale unit will continue to be higher than in the past. Okay? In other words, a crash is not going to happen in the used car market. So with that, I've debunked all this FUD, but I'm not done. Outside of speculative assets like, let's say, crypto, stocks, and precious metals, the number one driver of price has always been and will continue to be just basic supply and demand. So what does the supply and demand look like for 2024? Well, guess what? Cox Automotive has an answer for that too. They say, compared to the start of December 1 year ago, the total supply of unsold used vehicles on dealer lots across the US was virtually unchanged. And then they go on to say the used vehicle market is relatively balanced. It has been stuck in the 2.2 to 2.3 million range for some time now, which is generally considered tight. Okay, so the supply hasn't changed at all in recent years, and compared to the rest of history, it's actually a tight market. Now, we just covered the supply, but what about the demand? Well, luckily, Cox Automotive also has the answer for us there. Year to date, retail used vehicle sales at the start of December were on course to finish 2023 near 19 million units, just below levels set in 2022 when 19.1 million units were sold. And in my opinion, the main driver of this 4% decrease in prices has been interest rates going up. And interest rates affect both the dealers and the consumers negatively, which means both parties will see a decrease in wholesale and also retail sale, which again is literally what happened, right? The wholesale went down 7% and then the retail went down 4%. And I really think this is all just because of interest rates. So what do I think is actually going to happen? What is the honest assessment that I can provide to you using actual data? Well, for one, I do agree with the Cox Automotive report. I think all their conclusions are pretty accurate. In 2024, I do think we'll see an equilibrium and some kind of balance in the used car market, and then it will slowly start to climb back up. But that's just the used car market. Now, for the new car market, this one's a little bit different. I think it's important to note that from 2016, let's rewind to the past. In 2016 to 2019, it was normal for manufacturers to sell around 17 million vehicles in the United States every single year. For 2023, it is predicted that sales will finally hit $15 million, and that's $15 million vehicles, and that's the highest it's been since 2019. So what that means is production and inventory for the new car market is still lower than what it's been from 2016 to 2019. It's still lower than what was considered normal. So lower inventory, so we will have lower inventory, but our demand remains equal or higher, which means prices are going to stay high. So my prediction is that, unfortunately, dealerships will still be stealerships because of this low inventory. And the only fix to dealerships is for manufacturers to start making more vehicles so those lots get filled. But again, even if they can fill those lots, inflation has been baked into the price of the MSRP. So the best thing we will see is that dealerships will finally get rid of dealer markups and then finally get rid of market adjustments, and they will start selling at or below MSRP. But again, inflation. The 2024 MSRP price is significantly higher than the 2019 MSRP price. It's not coming back down. Anyways, that's the video. I'm just so sick of the design fear mongering just for people to get views on their videos. And even some of their commenters are starting to call them out on it. It's just so dishonest, and it's been happening for over a year now. Now look, I haven't made a thumbnail yet for this video. I'm just doing the recording. But you know what I'm wondering is that maybe in order to get to 1,000 subscribers, I have to embrace the FUD. So let's experiment with some of these thumbnails. All right, so maybe I should do something like this guy. Here you go. Look really concerned. Or this one right here. Or this one. And then finally, what about this one? Okay, if those look good, I'll make it a thumbnail. Actually, I'm not going to because I'm not going to play that game. But I thought it would be funny to do anyways. Well, that's enough fun for today. Thanks for watching. See you next time.